Good evening, I'm Giuseppe Basile. I'm the instant trader you can find at the website www.fipstalkertrading.com. I also post regularly on Twitter using the @fipstalker nickname. Good evening, today is May the 10th, 2015. It's 7:30 p.m. time in Toronto, or EST time. And in this video, I'm going to review for you the 13 markets I follow. Before getting into that, I just want to remind you that you can go to Ustream here and watch my interview I had on Saturday with Dale Pinkert, and I'm going to drop a link. I have a link to it in my newsletter as well. I also want to remind you that there is an exceptional offer I'm giving to my newsletter subscriber here. This is exclusive of my May 2015 session of the Fipstalker Methods Coaching Program. You can find information here. Again, I'll leave you the link. I give a complete formula to take advantage of the effects of algorithms, modern algorithms on price, and of course I also provide information about the Fipstalking timing technique as well as its use for advanced timing. So I also have, and that's the most important point, 4 things that subscribers will receive that no one else will. And this is an exceptional offer. So I'm not going to offer the same in the future. You have a $250 discount, free access to my Winning with Algos in Modern Markets course, my premium webinars for 1 year, and you have 2 1-to-1 reviews with me. And I will also throw in my new Fipstalker intraday system. It's a 2000 value here, and here is the price. If you're interested, let me know. I also want to remind you that tomorrow morning at 8 EST is going to be 12 GMT. There's the open Q&A with me on FX Street. I'll do a quick market review. There are already 71 people. This is a free event, so join me. We will review the markets together, and I will show some setups and the use of Fipstalking for the timing, and you can ask any questions you want. Finally, if you decide to join the coaching program, you're going to get access to all the material here, and then we will have we'll have 9 reviews of up to 3 hours, live reviews in which we look at the market and we review the material together and we apply the methods to the market. So let's go back to the review here, and let's start from the euro dollar, which is what you see on the screen. And those who follow me know that I've been looking at one important level in the last few weeks, and that was the level from lows to lows. And as we can see, there was an initial reaction to the level, which is the lower level here. The market kept moving higher, pushed by an extension long in the daily time frame that I showed you last week as well, and then pierced that level. There is another level, an area of potential resistance that we have to consider, and that is the recent low here too low, and the market is actually reacting into that area instead. So algorithms are using that level. Now when we look at the daily time frame here, we saw an interesting sequence of measure move here, which gives also the next level of potential support. We saw market participating at this 106.80 level here, bringing price into the first and second target, and then the market started moving in extensions, and we could anticipate 2 days in advance we had the next measure move, and look at where the price stopped. The price stopped right at that measure move and broke price right at that first target, which was touched within the limits to get profits there. When you trace this on the smaller time frame, you can see that. So price went to that first target, and now where is it retracing? Well, we know very well that by applying rules, it is retracing into the next measure move here, which is the next highs to high. So the market will test again this 111.22. A lot of people will see a retest of previous lows here, but that's not the reason why the market might bounce at that level. If the market moves below 110.57 here, we are going to continue lower as anticipated. Moving to the S&P 500 here, this market has been very choppy in the last few weeks. However, when you look at the larger time frame here, we had participation at this 1960, which eventually broke price to that first target back at the end of April. So at the moment, this market is retracing and actually is initially has respected this measure move, and on Wednesday, and then confirmed on Thursday, it has pierced that measure move. Does it mean that this market is going to retrace? This market could actually retrace all the way into the this level if the market inverts direction. However, we also have to consider that this measure move in 90.60, it's an extension, so there is the possibility for this market to just continue higher. Dollar index is very important at the moment because a lot of people are calling for an end of this move lower. And last week I mentioned a level that we've been following, and it acted as a resistance back in March here, and then that level was retested and eventually was breached at the end of last week. So this potential area of support is gone, but we have support below price at 93.55. So we need to see what market is going to, how this market is going to behave at that level, and that will be deciding also on what the euro will actually do. So this market is still in a potential move higher. Now we also have to recognize and remember that the short was caused by an extension short here that has been traced from the highs, from the lows in 2001 here to lows, and that's where we had participation of this market. Now, will this market keep moving lower? We don't know until the 91.87 is pierced on the downside. Moving to gold here, we know that gold is still in this area of potential support and has not printed lower low in the last 2 weeks here, and is still being supported at these levels. Now we have a measure move short here, so shorts are in control on the daily, but on the weekly, remember this is an area of potential participation higher. So this market is still moving laterally below this weekly or daily short here, but within an area of potential participation higher. And we have to remember that it's linked to the balance sheet, so it's probably going to behave as the euro will behave here at this stage. We'll get another update on this next month, a fundamental update, and we'll see where we are and whether this intermarket relation between gold and the euro has changed. I don't follow intermarket relations for the same reason I just said, that they change quite, I wouldn't say quite often, but they can change without us knowing it, and no one sends us an email when the intermarket relationship change. So it's not something that we can use for our trading. At the moment, so this market is still moving laterally, and there's a possibility for this level of resistance 1226 here to be retested again. Moving to the US dollar to Japanese yen, this market has been moving on top of this 50% measure move from previous lows to highs, and it's been hovering around this. We know that weekly are waiting for this market to retest this 113 to get involved or decide whether they will get involved or not. And this 116 has been acting as support twice. So when you move on the day, there's not really a lot we can say about this market besides the fact that this previous area of support here has been confirmed here, and it's now acting as resistance here, so it's possible for this market again to go back and do another trip into this 119 level. So the market is easy to trade on the daily, but when you use the Fibstalker intraday system, you can trade this market on the 4 hour, on the 1 hour as well, and time on the 15 minutes and 1 minute. So I'm offering the Fibstalker intraday system only to those who subscribe my next Fibstalker session, starting in May the 30th. So until May the 30th, you will have the opportunity to get that intraday system for free on top of the Fibstalker Methods coaching program. Moving to the Euro versus Japanese yen here. We have this market, when we study it on the larger time frame, we know that this market has nothing below price until you get into this 122 level. The 122 level, it's an important level that that we know we have to retest, because the whole sequence of measure move higher here on the larger time frame has failed, and so we are just waiting for this market to resume its move lower into 122. If you are short here, you should try to stay short, because that's where that's an important level of testing. I mentioned this potential extension short here, and that's a 90% retracement that we saw of the previous move, which is this, which we're pressing to the first target, and then here it is at 90% there. So this is a very important level, an area of potential resistance, and if the sequence of measure move breaks here on the daily and on the 4 hour, we're going to resume the move into that level. When we look at where the first target of that measure move is, it lines up right with that 122. So that's telling on what algorithms are looking at in this market. Moving to the pound versus Japanese yen, this market has been jumping around here for some time. We know that we were looking for a potential retrace here into a next level of the next measure move on the daily here, and we had price respecting this these measure moves, and I was waiting for this market to retest 173.27. Now it's possible that for some reason this market is actually trading another measure move here, and one level that is being respected to the pip, it's actually jumping extension here. Now this is something that we would not identify before the fact, but only after the fact, because we follow the sequence on the weekly time frame. If this is the case, this market is going to continue higher and leave us without an opportunity to trade it. Last week I mentioned this extension, which we're pressing to the first target here, and there's a potential for a retrace into the next measured move if that's the case, and that would be the highs to highs. Okay, this level that I mentioned here is just a potential level of support. That would be the fruit of a jumping extension here that was not possible to identify in advance, and in fact it was tested for the first time here in April. When this happens, it's not a big deal, because we can actually drill down into the smaller time frames here, 4 hours, even 1 hour with intraday system, and take opportunities in the direction of the daily move here. So the larger time frames are of course important when you want to time a daily or weekly level and time it on the 15 minutes, so that the reward risk is very, very high. In this case, this market apparently is not offering that opportunity, so we will see what happens here. And it's in any way the other level, which is the legit level, is still a valid level we have to consider. So I'll keep it on the charts, because this market could just reverse and go and test that level, which is the legit level for algorithms to look at. Moving to the pound versus the US dollar, this market has been rallying higher here and then started a correction of course there was an effect here of the vote in UK and that effect also broke the sequence that we had here, and that happened well before the vote. So what can happen in this market is now just a correction after the emotions of the vote went out and it's possible for this market maybe to continue higher and trying to find the next level that is going to be respected here for a continuation lower. If the euro will continue lower, the pound almost certainly will continue lower. This gap that we had here does not help in understanding where the sequence fails. We can always use the highs to highs. I mean, with my student, I typically review also the smaller time frame here. So a potential level of support on the daily would be the 154.08, but it's not clean because there is this hole in price structure here, so that does not help identifying the right levels. Moving to the Australian dollar versus the US dollar, this market has respected here an all the way halfway back, a 50% retracement from the lows at the beginning of April to highs here, and we saw that participation at the end of last week, at beginning of this week. And however, price structure is not clean here, as you can see. Price went to retest the lows here and broke this 0.87. So to me, this is just a movement, a lateral movement on top of this level. And we know that there is a very well identified level on the larger time frame that has not been tested just yet. That would be the continuation extension short here. Likewise in the euro, it is possible that algorithms are using another level there, and if that's the case, a lower level would be 0.81 here. So if the market continues laterally and then test this level, we are going to apply our fib stalking timing technique here to try to time an entry short. So at the moment, both these two levels, 0.81 and 0.8202, are still valid. And New Zealand dollar versus US dollar here. This market has actually had this the double test of this level 0.7442. The second test is the dangerous test, and this market has continued higher here and never reached that first target. This past week has been continuing all the way lower. It traded this measured move that had a first target aligned to previous highs, but then this was pierced on the downside, and now is retesting again this 0.7442. So what is going to happen to this market is this market is clearly trading in extension here, and it's possible for the market to just continue lower into that second target. And then resume a move lower. So when we look at this market on the weekly, what has been trading here, it's a low to low. So let me show you how we derived this. We had the previous low to low, and then this came to play again here, and as you can see, we had this level tested 3 times. So there is the possibility for this market to keep moving lower, like all the markets that are trading against the US dollar here, and get into that 0.6860 here, and that would actually also confirm that the dollar is not yet dead, and there's a possibility for the dollar to keep moving higher. The US dollar versus the Canadian dollar, on the other hand, has showed that reaction lower from from an important level here. This level is the all the way halfway back from the highs in 2002 here to the lows in 2007, and that level, an area of potential resistance, came into play once and came into play again here and was retested a number of times, likewise in past 2008 and 2009. And now price is being pushed into this new level of support, 120.61 here, which is going to be the tail. So as we can see, the price has been picked up by algorithms twice into this area already, once and twice in the last 2 weeks, and there is the possibility for this market to just continue higher and retest this 126.28 again. That's what I'm looking at for this market. Obviously, if this 1870 is pierced on the downside, things are totally different. Okay, things will change completely. In terms of the sequence of measure move on the daily here, we saw price getting into the first target and second target before testing this level here, and the next measure move here, as we can see, slightly failed. So we are in the condition of basket setup here, and this is something I explain a little bit better in my coaching program here. So there is a possibility for this market to react at these levels, so be prepared for a move higher that could go to the halfway back here, at least into this 123.86. Euro versus Canadian dollar, it's another pair I follow. This is a very interesting pair, and this week, as you can see, has confirmed that pierce there. So it's I mean, this pair, when you look at the weekly time frame, you know that it's like really like the euro dollar. There is nothing below this price that can actually hold this this price. So this price could go and test second target here, but for sure this 126.82. As you can see, there is a high to low here that has been respected last week, and that was also a very good entry. So congratulations to those who respected and timed that level, 135.57, and the market is being pushed down now into the 126.82, which again would confirm weakness in the euro. And finally, US dollar versus the Swiss franc here, another important development this week. I mentioned that last week. If this 0.9094 was pierced on the downside, there was a possibility for this market to just retest again this 86.58 here. It appears to me that after this decouple, I mean, this price has been artificially pushed higher into previous level to allow maybe some people to get out of it, and then now it's being sold again, and we're going to see 0.8658 again, very probably here. When we move to the daily time frame, we see a little bit of structure here. We saw price trade is ambush 0.9803. You could time this with the Phipps Tolkien timing technique, and look at the beauty of it. It went to the first target and then the second target, and and then it reacted, and now it's into this potential area of continuation lower here. So if we never pierce the 0.9329, there is a good possibility for a continuation lower into first and second target 0.8821. Okay, this is it for today. Thanks a lot for joining me. I want to remind Phipps Talker Methods Coaching Program. There is a great offer I'm giving to my newsletter subscriber, 4 things you will receive that no one else will. So have a look at it, and if you have any questions, let me know. And again, join me tomorrow at the open Q&A with Phipps Talker and market review. You can register. Look at my newsletter. You can register for free on fxtrade.com. Thank you very much, and have a great evening and a great trading week. Bye bye now.